A stock with 18% total return annually, and analysts predicting a 1-year price estimate of 20% to the upside. Is it a buy? Let's find out. In this video, we will talk about Artisan Partners Asset Management. It's a $2.56 billion mid-cap global investment management firm founded in 1994. This asset management company specializes in providing high-value-added active investment strategies to global clients. It provides services to pensions, profit-sharing plans, trusts, foundations, charitable organizations, government entities, and more. The company has autonomous investment teams, which manage a broad range of U.S., non-U.S., and global investment strategies that are well diversified by asset class, market cap, and investment style. Here we have the company's assets under management. We see an increase over the years, and this is what we need to see for this type of businesses, because it shows the clients have interest in the company's services. Here we have the free cash flow, an important piece of information because it shows the efficiency the company has in generating cash, shows the actual amount of cash the company has at its disposal for distributions like dividends. Investors like to check the free cash flow to ensure the company has financial solvency. Moving on, as of the time of making this video, the company pays a quarterly dividend of 10.34%. This dividend has been growing for 3 consecutive years at a dividend growth rate of 10.65% annually. The 5-year dividend history chart shows an uptrend over the years. And when it comes to ownership, 85% of the shares are owned by institutions. Before we move on to the final part of the video, I want to share an area of the company that may be of concern, which is share dilution. This is not something unique to this company. Other companies do this as well. What we're talking about here is the creation of new shares, which happens when a firm wants to fund a capital expenditure, a project, a new venture, to cover expenses and liabilities, or a company can offer new shares in exchange for acquisitions or services. The creation of new shares commonly results in a price drop per share, and shareholders owning a smaller percentage of the company. However, if the company utilizes the money right to become more profitable and increase growth, this will result in an increase of the value of the stock. For fundamentals, we have the following. The 5-year performance chart shows an uptrend. Revenue growth is 11.23% annually. Operating margin went from 36% in 2017 to 44% in 2021, an 18% total return annually in the last 5 years, and a 1-year analyst target price estimate of 20% to the upside. This video is only for educational purposes. We must do our own research. So what do you think about this company? Let us know in the comments below. Like, comment, and subscribe so we can continue to learn.